Hi guys, welcome back to this week's Technical Insight. The star of last week's market was the blue chip Dow Jones Index, which managed to mark a winning streak of 10 consecutive days through to Friday, riding high on positive quarterly results from many high-profile defensive stocks. Although the Dow Jones Index was only up 0.01% last Friday, it has risen 2.1% on a weekly basis. The last time the index had a winning streak this long was in 2017. The tech sector, however, is not telling the same success story. The Nasdaq Composite felt the blow of disappointing results from companies like Netflix and Tesla. The index was down 0.22% on Friday and dropped 0.42% on a weekly basis. Tesla CEO Elon Musk lost almost $20 billion on Thursday as investors rushed to dump the carmaker stock. Shares were down almost 10% on Thursday and are closing the week on a negative note. The company lost over $90 billion in value despite presenting successful quarterly results that surpassed analyst expectations and featured an all-time high quarterly revenue figure. Analysts blame Musk's poorly chosen focus points during the conference call. The CEO spoke about possible price cuts for Tesla vehicles and failed to provide specific details over the key future developments, such as the launch date of the company's long-awaited Cybertruck. Musk also mentioned likely cuts in production output due to summer factory shutdown. Netflix, on the other hand, posted better than expected earnings per share, but missed estimates on the revenue. Analysts praised the company's recent crackdown on account sharing, which resulted in almost 6 million new accounts being opened on the platform after more than 100 million people were found to be sharing their password with persons outside their household. Netflix shares almost lost 4% for the week. In spite of the sell-off, most analysts have raised their price target for the streaming company stock. Good quarterly results from major banks helped maintain a positive momentum across the major markets. Bank of America shares were up 8.2% weekly as the company results beat analyst expectations. Revenues come to $25.28 billion this quarter, with earnings per share at 88 US cents as reported last week. What most investors will be looking out for this week are the tech giants leading the earnings calendar, with results from Microsoft and Alphabet starting on Tuesday. So let's take a look at the chart of both of these tech giants and see which one will be able to provide a better opportunity. First, let's look at Microsoft. So Microsoft has been on a predominant uptrend since the beginning of this year. It has also more or less formed a double bottom formation connecting the low of November last year as well as the beginning of this year in January. You can see that since the beginning of March, Microsoft's share price has formed a positive uptrend channel. And this is demarcated by the two parallel lines that you see over here. It is drawn using the low of March as well as the low of April, forming the lower bound of the uptrend line, which was recently tested in July and seems to be still intact. So this uptrend line on the support side would likely provide a very strong support for Microsoft's share price. And this has also now found confluence with the red color line that you see over here, and that is the 50 days moving average, currently reading at the $331. So at this level of $331, it is likely to provide Microsoft's share price with a significant amount of support at this level. Looking at the technical indicators, the MACD line is converging towards the signal line, and that means that the recent uptrend that you see for the past 1 week is subsiding. However, the MACD line has not crossed below the signal line, and that means that the MACD still has a positive reading and it could still have some positive momentum in the share price right now. On the RSI indicator, it managed to stay above the 50-point neutral mark with the latest reading at 53.98. And although we see a recent pullback in the price, the RSI indicator managed to stay above the 50-point neutral mark, signaling to us that there may still be some positive momentum in the Microsoft share price as well, conquering the stance of the MACD indicator. So that means the $331 level, which is the 50 days moving average level, would become a good opportunity to get back into Microsoft share price stock. Next, let's look at Alphabet. Alphabet, similar to Microsoft, is on an uptrend since the beginning of this year. However, as you can see, the volatility of Alphabet share is much bigger than Microsoft, and hence it also do not seems to have formed a positive price channel or an uptrend price channel, which we see in Microsoft share price. Now, the recent low that we see during the February and March period seems to have said that there may be a double bottom kind of formation over here around the level of 88 US dollars. And this could be a very strong support for Alphabet share price. And connecting the low of March as well as July this year, we could form an uptrend line which could provide some support for Alphabet share prices. But as you can see, the last 5 trading days, Alphabet share price has been closing in the negative territory. And last Friday, it broke below the 20 days moving average as well as the 50 days moving average. And that could mean that in the medium term, Alphabet share price may have already peaked around this level that you see, which is the $128 level. And that would mean that Alphabet share price may break below the uptrend line that you see over here and go into a range-bound movement between the levels of $128 and $115. The MACD indicator is also not telling us any signal. As you can see, the trajectory of both the MACD line and signal line is pretty parallel and close to the zero baseline. Hence, there's not much of a direction that we can read from the MACD indicator. The RSI indicator, on the other hand, has broken below the 50-point neutral mark, and this means that the momentum is actually weaker now in Alphabet share price. So with both the MACD not giving us any kind of signal and the RSI slightly towards the negative signal, I would not be very positive on Alphabet performance going forward. And that would mean that comparing both Microsoft and Alphabet, Microsoft would be the better opportunity to get in around the $331 level. So with that, we come to the end of this week's video. And if you find it useful, do give us a like and a share, and we'll see you again next week in the next Technical Insight.